Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we are going to be diving down into the world of Bitcoin, taking a look at the bigger picture and the big zoomed out view of BTC on the price chart. So we'll be taking a look at where I think the likelihood, or what the likelihood is going to be, of a good significant bounce coming soon to the upside, and where I think the actual bottom is to be found. And as I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you have not yet joined us in Discord, links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out today. Okay, and let's get right on into this, right? So Bitcoin paired up with USD. This is the weekly chart, and Bitstamp is the data source here. So we're using Bitstamp because it goes all the way back to the very first kind of candle being August of 2011. This gives us the maximum kind of view over the patterns across a much larger time period, and it allows us to kind of dissect down what happened in 2013, 2017, 2021, and so forth and going forward, right? So obviously I've shown you this this chart many times on the channel, but basically, we've got the 2013, the 2017 bull runs, and you could argue the 2021 bull run, okay? And obviously we can see lots of different pieces of information here that are very, very important, okay? Such as 51,000% gains in 2013 to 12,000% gains in 2017, and only 2,000% gains in 2021. The clear picture here is diminishing returns over time, okay? This is why Bitcoin is great for maintaining wealth, but not very good for gaining it, okay? Which is why those altcoins are the ones that are really going to make your portfolio pop, not really BTC. But with that being said, good gains can still be made, but they're not going to be, things that are going to make you a millionaire from $10,000, for example, okay? And that being said, that's really what you're going to be looking for from those altcoins. Now, other pieces of really important information here that sometimes get overlooked, right? First of all, we have 67% crash in 133 days, okay? That was basically from the all-time high just down here, and it was an 86% pullback into the bear market low. Then it took 413 days to go from all-time high to bear market low in 2013 through to 2015, okay? So key pieces of information. Now, in 2017, it was a 69% crash in 56 days. This is basically the initial pullback, okay? Very similar to what we were looking at previously there. And we actually have an 84% crash to bear market low, and it was a 364 days from all-time high to bear market low, okay? So just basically 1 year. Now if we are heading up, thinking November here was our all-time high, our bear market low might be November, might be September, maybe somewhere around there. So we're getting closer and closer and closer to finding that bear market low, okay? And again, the initial crash really is actually about 50%, and it's not anywhere near as significant as it was before. And my estimated bear market low would put us about 60-something%, which would be significantly higher than the two previous bear market lows, okay? And this is actually very much aligned to the insignificant amount of gains that were made at the top as well. So everything is kind of related to each other. So we understand that your gains are being limited as time has progressed, but I do think your bear market lows are also being limited as time progresses as well. Not only in time, I think they're getting shorter, but also in their severity, okay? So really important that we understand these couple of things, because they really do set the mood going further forward, and it helps really put into context some of those people who are calling out, $9,000 BTC, for example. Whereas that is possible, it's also very possible that Bitcoin drops down to $10, right? Those are possible scenarios, doesn't mean that they are probable scenarios. So let's now move on to a couple of really key things. So a little while back, we used the Gaussian channel. The Gaussian channel was a great way of indicating bear markets. Okay, now we actually had to park this because something new had happened up here in 2021 that hadn't happened previously, and it would have been foolish for us to assume that we were going straight into a bear market using this one metric if this was actually now void. Okay, but the good news is I think we can now safely say that a bear market is going to follow if you close inside this Gaussian channel, regardless to whether or not you immediately close outside of that channel. Okay, so in the case of what happened back in 2021 is we had one weekly closed candle inside the channel, and the very next week we closed above the Gaussian channel. Okay, and that had never happened in the previous history of BTC. The only exception is the COVID crash of March 2020. Now, why is this important? Well, the Gaussian channel is really important for not necessarily just predicting the bear market, but also for predicting the bottom of the bear market. Okay, here we have two red sections of this Gaussian channel. Both of these come in just weeks after, you close below the Gaussian channel, and then a few weeks after you've closed below the Gaussian channel, we've pulled all the way down into the bear market low. The Gaussian channel turned red a few weeks before the bear market bottom was actually found. Now, we can also see the same thing in 2017. We closed below it, we pulled all the way down. A few weeks later, we hit rock bottom, and we are done. Now, the Gaussian channel just over here has just turned red. This 1 week just gone is the first red week in the Gaussian channel, which means we're probably only a few weeks away from actually seeing this Gaussian channel reach rock bottom, and that's where the value is going to be added. Okay, so again, we have a good indication here just from the Gaussian channel as to where things were previously and where things are heading once again. So that's fantastic news to know that we are heading on the right path here, and we're getting very, very close to that bottom. Okay, so we aren't there yet, so it hasn't come in, and it is going to be here very, very soon, in my opinion. Now, that's just the Gaussian channel. I did want to start with that, but we also have our 200 simple moving average. Now, our simple 200 moving average is an area that also has found this bear market bottom historically as well. Here you can see that actually we haven't got it all the way over to the bear market low, but we have come down and tested this 200 simple moving average and bounced from it before we actually got the 2017 bull run start running it to the upside, right? So really good key pieces of information there. Now also at the bear market bottom of the 2018, we bounced off this line twice, and then we started a good run in January of 2019 all the way up, and if it wasn't for the pandemic, we would have actually had spiked this up significantly higher faster. Okay, I think the pandemic really did weaken everything in the space, but essentially this 200 SMA was a key area for finding this bottom. It basically is the bear market bottom. Okay, obviously the pandemic did pull us down just below that 200 SMA, and then we moved on up from there as well. Even the pandemic crash did not stay above it for too long. I think there's actually just a 2-week period there where we actually were below this 200 SMA. Now, why is this important? Well, this is actually lining up very, very nicely with my expectations from Elliott wave theory, but is also lining up with our Gaussian channel, thinking that we've got a little bit more room to the downside to be had. This is actually indicating to us a current pace of about $22,300. Okay, that seems to be the area of the bottom here for BTC right now, based on this 200 SMA. Okay, so again, another really good tool to be used here to help us understand where this bottom is likely to be found. Now we can come across and use the exponential moving averages, if I can get my words out, and these EMAs. Now the EMAs also do a very similar path, journey, and predictive quality to it that the simple moving average does. Okay, so here what we can see is we can see 3 lines. We've got the 20, the 50, and the 100, I think. We just bear with me 1 second, and just jump in here. So it's the 20, the 50, and the 200. Okay, the ones that we really want to focus in on are going to be our 20 and our 50. And what I'm going to do is I'm going to put the 50 in. Actually, yeah, I'll put it into this light blue color. Okay, cool, and then I'll just close that off. So basically with these, some of the key pieces of information that happen with our EMAs are that the second that we've closed below the 20 EMA, we historically have gone down to close below the 50 EMA. Okay, this happened over here in the bear market bottoms for the 2013 bull run, in the 2015 bear market low. Okay, we essentially closed below both of those as we reached that bottom. Now it was a little bit, less noticeable back in 2013 than it is over here in 2017. Now here we close below that 20 and we come on down and we close below and we stay below the 50 EMA, and then basically once we close above, that's really where the bull run starts. And then right now we have closed below the 20, we're looking to close below the 50, and we're right on that journey to that as well. So essentially all of that is looking really, really tidy and quite good from that kind of perspective as well. So yeah, we're just kind of waiting for that one to kind of reach the bottom, and then we are in a really, really good spot with that. So essentially we've got all of these different metrics, all of these different indicators helping us understand where our most probable bottom is going to be found, right? And I've got this marked out down here at $23,000, but it can potentially be a little bit lower than that. I think essentially anywhere really between 22, 23, it seems to be the most probable area for Bitcoin to find its bottom, right? But I don't expect things to be in straight lines, and that's where I'm going to now take us. I'm going to take us over into my Binance data, and I'm going to come over into our hourly chart here. Okay, so there's going to be a few narratives that are going to be spun around a little bit in the coming weeks, I feel. One is we're about to push up a little bit, okay? And this is going to catch a few people out, because people are going to think that the bottom's already in and now we're getting some good traction, right? We are targeting out $33,200. Now, this is a short-term push to the upside just because we need to specifically complete a pattern, okay? And that is a 5, 3, 5 pattern, okay? This is something that has to play out in my opinion. Now it doesn't, I mean, we could argue that, that 5 wave ends at C wave there, etc, etc. We could argue that, but for the most part I actually think we are going to see this push to the upside. This is a 33,000 target, and when the price starts moving up, people are going to say the bottom's already in, we're rallying our way out of here now. These are unfortunate things that are probably going to be spoken about in the space. They aren't really accurate in my opinion, and it's potentially going to catch a lot of retail investors out, unfortunately, because once this comes in, this is actually going to mark our top of our 4th wave high, and from there I think we are going to have that crash taking us down towards our low end targets. Okay, so I do want to kind of just put this warning out there at the end of this video. I'm expecting upward directional moves to occur, not necessarily today. We've still got a little bit more room to hit in this downside first. But eventually we're going to start this kind of 5 wave structure upwards, and once that is done, that rug is going to get pulled and we are going to hit the floor hard. Again, whale games continue, but essentially, all of this really is just a 4th wave move right here, and our targets are still all the way down here on our macro view. Okay, so try not to get too caught out with the some of this volatility that's going on here. Essentially, a lot of this is short-term stuff. There's going to be some fantastic gains to be made on altcoins, don't get me wrong. There's some fantastic trading opportunities, but they should be seen as short-term, and I do think we are likely to see these significant pulls to the downside afterwards. So guys, I'm going to leave the video there. Hopefully you have found this useful and informative. Hit the like button, I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.